Ollie, widely anticipated. We got the first move. The focus today is about the second move and maybe a third. Are we going to get a second and third?
That's absolutely right, Jonathan. There's a lot of consensus going into this that this is what it's going to be. And there you have it, the ECB, the first major central bank to hike rates in the wake of the Iran war to deal with that inflationary shock coming out of it. The 25-point basis point increase in rates is as anticipated. The question, as you say, Jonathan, is the forward guidance. What kind of tone are we going to get from Christine Lagarde in about 30 minutes time? I'd like to also take your attention to some of the other things that we're also seeing here now, because the other thing that the ECB is putting out right now is also their forecast on inflation for the year going forward. This is absolutely crucial. The prior forecast for inflation in 2026 was for 2.6%. It is now for 3%. So you're getting that inflation readjustment higher and higher and higher. And as we've been talking about, it's not just the headline number. It's not just the sort of energy inflation figure that the ECB is looking at. We've seen core rise substantially. We actually saw it, accelerate at a faster pace, in a faster acceleration in the month of May than the headline number. So these are all the issues that are going to be confronting the ECB. The question is this the beginning of a rate hiking cycle? Depending on who you ask, it's even a mistake that they're raising rates today. We spoke to Jeffrey Yu a little bit earlier in the week. He said that if you raise rates this week, you're going to be cutting by Q4.
They clearly don't want to be articulating the beginning of a rate hiking cycle. Lisa, just looking at the language and going through the statement and the headlines from it and listening to Ollie, it's a central bank that wants to take it meeting by meeting. Based on that, that's what you'd expect to hear from Christine Lagarde in about 20 minutes' time.
Which is why they increased their inflation expectation over the next couple of years, because potentially you could interpret this as them not wanting to curtail growth too quickly and raise hikes too significantly. It's really going to be up to her in terms of how she messages this, because right now you can read this in different ways. Data dependency, not pre-committing to any kind of path, could be taken as a more dovish take. At the same time, if she comes out and says, we're looking squarely at CPI at X level and we're going to hike again if it stays there, well, that's going to be viewed as hawkish.
Ollie, how haunted is this institution, this committee, by 2008 and 2011 and the hikes they made in those years?
Yeah, what's interesting, John, is they seem currently more haunted by 2022, right, which was acting too slowly on the inflation side of things. And when you think about the stagflationary dynamic, the message that the ECB is sending right now is that they're less worried about stag, they're more worried about inflation. And that is really the message that you're getting from the ECB. And just another line crossing here, looking at the 2026 GDP forecast, the stagflation side of that, the sort of growth side, that they see growth at 0.8%. The prior forecast was 0.9%. So that's just a reduction of growth forecast by about 10 basis points. That is not something terribly dramatic. So I do think that for the ECB, yes, they're haunted by 2011. That is the big question. They hiked too early. They had to cut rates immediately. But the other question is 2022, and I think that's probably more present in their minds right now.